Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
General advice disclaimer. The information provided is general in nature and does not take into account your personal objectives, financial situation, or needs. Before acting on any information, you should consider whether it is appropriate for your circumstances and seek professional advice from a licensed financial advisor. While every effort has been made to ensure the accuracy of the information, it is not guaranteed. It is based on our understanding of regulations and laws as at the publication date. As these are subject to change, you should talk to a professional advisor for the most up-to-date information. Any examples or illustrations provided are for illustrative purposes only and are not a guarantee of future performance. We do not accept any liability for any loss or damage incurred by reliance on the information provided. Any opinions expressed are subject to change without notice. Past performance is not indicative of future results, and all investments carry risks. Neither the hosts, guests, nor any affiliated entities accept liability for any loss or damage arising from reliance on the information provided. By listening to this podcast and viewing this presentation, you acknowledge and agree to these terms.
Good morning, everyone. Welcome to what is probably the last episode for 2025. I think, we can go out with a bang. There's so many things happened this week and over the last couple of, weeks in general. Like December has been jam-packed with a lot of news and updates. So I'm going to break up today with a couple of things. We'll have a look at what's happening in the US. We'll have a look at the RBA announcement. We'll chat about the changes or, not maybe current changes, but future changes that might be coming to self-employed. And we'll just have a look at the year. We'll have a look at how the markets have done. We'll do some round numbers and see what has done well and what has perhaps, sort of didn't do so well over the last 12 months. So sounds like a lot, but we'll keep it nice and brief, super sharp, so you guys can get up to date with this info. So if you've got any questions, jump into the chat, and we'll try to address your questions. All right. So breaking news, I guess, from last night, the US cut the rates, so 25 basis points, which is kind of expected. From a perspective of markets and everything like that, it was kind of priced in for a little while. So that's going to be a sort of good sentiment for the markets. So, comparing that to the Oz market and what the RBA did on Tuesday, they've released a statement on hold as expected. They kind of kept the brief or the statement very short compared to the other ones. So, you'd know by now that typically I'd go through it. But in summary, I'm not going to go through it because there's a couple other things I want to chat to you guys today. But yeah, essentially they're saying, yes, they've seen the data. Yes, the inflation has come down quite a bit since 2022. So they're kind of going back 3 years now. Everything is great. They think that the rate cuts earlier this year are doing what they're supposed to do, and yet to actually flow through the entire population or the entire market. So they're staying put, reserved, and they highlighted things around unemployment and that's kind of had its ups and downs. So in essence, they're saying let's see where the data goes. We understand that the inflation is starting to creep up. We're aware of it, but let's just see what it does in the next little while. So they're not back for another meeting until Feb. So we've got a bit of a gap there. So over that period, we'll see what sort of data comes through and then evaluate from there. Our prediction, or we don't know, but if we were to guess, we'd probably look at hold for a little while until things settle down. There's pressures from the electricity space. So, if you look at your power bills, you'll probably notice that they've gone up quite a bit. The subsidies are now starting to end. In Victoria, they ended in October. Other states, I'm not too sure about, but, much of a muchness, really. So those are the two big things that happened this week from the rates perspective. So Australia on hold, US dropped it by 25 basis points. The US side, the expectation is potentially they might drop it a little bit more next year, especially when they sort of change they sort of Reserve Bank equivalent of Fed personnel I think it's March or April next year. So perfect. All right. So we're up to date with that. Amazing. Let's have a look at the year. How did everyone do over the year? Right. Perfect time. We're about to go on a break. Have lots of Christmas parties, New Year's, etc. But let's just kind of rewind and see what 2025 did for us this year. So Aussie market. So the Australian shares up 2.5%. I guess, in line with inflation, not too bad. We've got Patty, morning Patty. Welcome. Thank you for jumping on. We've got the US market, so top 500, up 14% for the year. Dow Jones is up 8.5%. NASDAQ up 20%. So that's the tech side, right? So all the tech will probably, we're aware of the NVIDIA, Netflix, all of those guys, they're kind of kicking goals right now. And then, hard metals, gold, silver. Gold is up 50% this year. But if you were invested in silver, you'd be up 90%, right? Huge results from asset classes that typically do very little throughout the year. And what has sort of done poorly? Well, oil is down 14%. So, we can, oil is used in a lot of materials around the world. So, which means that the production should be, the cost of the production should be reduced. And Bitcoin, that volatile asset class that everybody seems to be investing in, that's down 9% for the year. Obviously, the last sort of 2 months have had a big impact on it. So, overall, decent year. All the alternative assets, like the hard assets, the oil, Bitcoin, etc., mixed feelings. But, your typical stock, your equities, done quite well. Right. Okay. We're up to date with that. Amazing, right? So great news. However, let's now talk about the news that are coming through at the start. Actually came through last week around self-employed, right? So self-employed and personal income that they earn. So the ATO is now looking into how you distribute your income from your business. So why does that matter? So let me give you an example. You're a Sparky. You go out, you do your work, change the switchboard, put in a light, invoice at the end of the year, or at the end of the quarter. You need to distribute your profits. Let's just say it's a profitable sort of situation. Typically, you would try to find the next best individual with the lowest tax rate, and you pay them out. Typically would be, let's just say, a spouse, kids, things of that nature. So what the ATO is doing now, they're kind of looking at that and saying, hey, hold on a second. So Mr. Electrician or Mrs. Electrician, we don't know. You've just done all the work. You went out there, you changed the switchboard, you invoiced, you did all the work. So now you want to distribute that income to another entity that hasn't done any of the work. So let's put that under, what are we trying to do here? And the way that they label it essentially is they're calling it tax avoidance under the Part 4A, which is a tax avoidance act that, they're trying to swindle that under. So in effect, what that means is that that income that the Sparky will be generating moving forward would be all assessed under his or her name, which means that the tax that the individual will have to pay will be much higher moving forward, because they're no longer able to distribute their income in a more tax effective way. So this doesn't apply to businesses that operate like selling, buying goods. This is more from your personal sort of exertion, right? So again, who are these people? Doctors, financial services, tradies, anyone, consultants, right? Consultants is another one. So all of these groups will kind of be looked at, and so at the moment the ATO is kind of flagging it to say, hey, this is going to be on our radar in the future. And that future they've mentioned, I think it's the 30th of June 2027. So really about a year, 30th of June 2027. And they're saying, hey, it's on our radar. This is what we're going to be looking at in the future. Make sure that you prepare, because if we see that, the evidence of that you're trying to avoid paying tax, then, you'll most likely be put under Part 4A tax avoidance. So, and they kind of break it down as well. So there's a full guide on it that came out start of the year. I'm just having a look here for an example. Give me a sec. So they basically call it high risk and low risk, right? So to give you an idea, right? Again, if I use a Sparky as an example, right? Let's just say they're earning income, they're doing jobs, blah blah blah, and they typically try to pay everything out as much as possible. There's, it's a single band type of business, one Sparky, nobody else, just do the jobs that you get through, I don't know, what are those advertising? I don't know, marketplace, I don't know, something wherever you advertise, right? If you essentially don't have any plans for the profits that you generate, and that just goes out to your to your sort of family or other entities, well, then that would be viewed as high risk, right? So, which means that would be that particular entity and business will be coming under a bit of a scrutiny to say, hey, why, what's going on? Why did this happen? Please explain. Whereas if the same Sparky goes out and says, all right, you know what? I've got all this profit in the business now. Let me spend some money on advertising. Let me, buy some new tools, which I think they all love to do. So let me bring on another tradie to be in the business. So if there's a plan to sort of scale up the business and illustrate that you putting the profits back into the business, then that will actually come up under the low risk. So that threshold between high and low risk, is going to be relatively small, but something super important to consider when you come to that sort of 30th of June. So you've got about a year and a half. Review your business plan, review how you sort of move your funds around. Obviously, not saying you need to try to find a clever way to get out of it, but it's just something that the ATO has flagged. And if you're paying tax, that means you're earning money, which is a good result. But you should be potentially paying tax to a level that applicable to you, as opposed to more than you need to. So see how the difference between the two is going to be quite small. And again, sometimes you might have your spouse in the business doing the books and whatnot, but you're paying them equivalent to like a full-time corporate type of wage. Let's just say maybe bookkeeping might be, I don't know, I don't really know the wage, but let's just say it's $50,000 a year. But from the business perspective, you pay them $150,000 for a role that doesn't necessarily pay that amount of income. So that's going to again bring you from a low risk to high risk sort of business, right? So again, something to keep your eye over and being prepared for that in the lead up, right? So again, who's it impacting? Basically, anyone who is earning income from their personal exertion, which means again, doctors, tradies, architects, consultants, everyone in that direction, they would be subject to this. This also applies to the companies too. So if you're running your business through a company or through a trust, then this will still apply to you regardless. So, or the other thing is actually they mentioned, because I read through the thing, through the guidance, they're talking about distributing to entities that have losses in them, right? So in distributing to essentially absorb the income with the previous losses. So again, question why? What's the reason for that, etc. So just something to be mindful of, and something to prepare for 2026, because ultimately these things will continue to pop up. I don't think it's had too much of media attention, to be honest, because once it's in the media, everyone is aware of it, but these types of things that come out irregularly from the ATO, good to know, but also good time to start planning for these things in the future to get you guys prepared. But yeah, look, expecting more of the same for 2026. I'm pretty sure that these sort of policies or guidances will be coming out more frequently. We'll try to keep you updated with it as much as possible. Obviously, chat to your accountant about this, because this is more on the accounting side. I'm sort of coming across this as a, hey, FYI, you should be aware. Start the discussion now. How will this impact on you based on your operations? But outside of that, relatively good year. So, the US and the international markets did quite well. Aussie, okay, inflation. Some obviously did better than others. All the alternative assets did do mixed bag, like the hard assets, gold, silver, or with all the inflation pressures are doing well. Bitcoin, not so well. Oil is in a similar sort of position. So, and this is, again, from the full year, if you were to gather anything from what I've been saying, or I guess the other guys on the podcast, is that, you got to stay diversified, right? Because the investments do different things at different points in time. Look at gold. I've mentioned this many times. In the last 15 years, for the first 12 or 13 years, it did nothing. And then the last couple of years, it really shot up. There's reasons for that, inflation, etc. And then, you look at other more volatile assets like Bitcoin up, quite significantly for most of the year, and then a sharp drop there. Again, I'm not going to be surprised if it's up 50% at some point next year. So, look, I hope you enjoyed the podcast this year, guys. I think the next one will be sometime late Jan. I'm sure you'll tune in wherever you are. Thank you for being involved in the chat and asking questions and saying good morning. So looking forward to 2026, bringing you more updates and hopefully more good news. So on that note, Merry Christmas, everyone. And I'll catch you in 2026. See you later. Bye.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.